And Namaste and good afternoon, everyone. I am pleased to welcome you all to our Q4 and FY2024 earnings call. As we reflect our performance in fiscal year 24, I am delighted to announce that we have witnessed a good demand for our products, marking a healthy year-on-year growth on volumes. Our sales volume grew by 10.7% YOY to 165 KT for the financial year 2024 and by 25% compared to the preceding quarter. This underscores the trust of our customers place in our product quality and customer service, reaffirming our position as a market leader. In line with our commitment to meet the escalating demand of our products, we are embarking on a journey of expanding our manufacturing capacity through a strategic series of debottlenecking exercises combined with brownfield capex to substantially enhance our production capabilities. For this, we have awarded a contract to Messrs. Mott MacDonald Private Limited for engineering consultancy to increase the annual capacity of ABS production capacity to 210 KT by FY28. We are also progressing as per schedule to increase our ABS capacity from 85 KT to 105 KT and PS capacity from 66 KT to 105 KT by various debottlenecking projects. This expansion initiative will enable us to not only keep pace with the growing domestic demand, but also position us as a leading player in the market, capable of delivery with efficiency and reliability. Furthermore, we are sure that our two new brands, Sterolite and SLX, which is for blends and ASA, an import substitute respectively, will add value to the stakeholders. This strategic move is poised to elevate our market presence and bolster our revenue streams. I am happy to share that despite the dynamic market conditions, we have successfully maintained our EBITDA margins. This achievement demonstrates our commitment to operational efficiencies also. Turning your attention to our financial performance, our sales revenue stood at INR 599 CR in quarter 4 FY24 versus 485 CR in quarter 3 for FY24 and INR 615 CR in quarter 4 FY23. Revenue for FY24 stood at rupees 2,222 crores versus 2,372 crore in FY23. Our PBITDA demonstrated resilience stood at rupees 74 crores in quarter 4 versus INR 60 crores in quarter 3 FY24 and INR 69 CR in quarter 4 FY23 and remaining steady at rupees 273 crores for financial year 24 in comparison to INR 290 CR in FY23. Notably, PBITD margins were stable at 12.4, previous quarter 12.3 for the quarter and 12.2 for the year, which is same as previous year, driven by our debottlenecking efforts and an increased share of value-added products and cost optimization products. Overall, revenue and margins were impacted despite increase in sales volume because of higher product prices and margins which were visible during COVID and continued till Q1 of FY22-23, got back to normal levels in Q2 FY22-23 onwards. Thank you for your attention. I would like to open the floor for Q&A session, for which I welcome our Managing Director, Sir, Shri Rahul R. Agarwal, sir. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Priyank Chheda with Vallum Capital. Please go ahead.
Hi, Rahulji, Bhupeshji, congratulations.
Sorry to interrupt. Mr. Chera, may I request that you use your handset, please? Your audio is not clear, sir.
Hello, is it clear now?
No,
Yes,
sir.
go ahead.
Okay. Congratulations, team, for a fantastic performance. So my question is, what explains the QOQ quarter-on-quarter drop in spread? I understand that we should not judge every quarter, but what I'm trying to understand is, while the styrene monomer prices as well as our ABS and PS prices have remained flat, any adverse product mix impact that we had in this quarter, is that what we should think of?
Priyank, the overall margins have not changed significantly. There could have been a product mix change, as you have clearly mentioned. But overall, there has been some disruptions in some parts of some of our operations, which have been compensated, which was short-term in nature, and due to which we had to, change some of the product mix also that we were able to supply. But that has been corrected since then. But it would not be a significant, change from what I can tell.
Perfect. And then, in the long term, how should we look into your spreads while we are comparing ABS as a product spread which is higher, polystyrene as a product spread which is lower, and we are a mixture of both. We have all the products across all the ranges. So, and our current product spreads are slightly near to the lower side of the polystyrene, right? Nearing the standalone polystyrene player. So, anything that we should, help us, how should we look forward as when we go ahead with the new product development, combining ABS, blends, as well as polystyrene? So what should be the EBITDA spreads or gross margin spread, gross level spread that you can help and guide?
Yeah, so, I can't clearly comment on any standalone polystyrene player because I don't believe there is any clear standalone polystyrene player. The other players in the industry which are supplying are not pure polystyrene players either, because they are a combination of many product segments. So there would not be a fair comparison. Coming back to our own spreads and the visibility and forecastability of spreads in the future, I think one would look at an annualized basis. As you know, there is some seasonality in the business at times as well. For instance, in the October to December quarter, we do see some lower volumes due to demand drop post-Diwali for some refrigeration, for some household appliances, and even in the automotive sector, which tends to bounce back in the first quarter, as we have seen this year as well. So I would recommend that one looks at an annualized, performance. To that extent, I believe we are in a normalized situation now, barring the Q1 performance, which was in FY2023, which Mr. Bhupesh has already clearly pointed out, which was a hangover of the earlier high spread regime, which was existing due to COVID and supply chain disruptions globally. So now that we are in a normalized situation, we would look at an annualized spread over the year, and assuming that we are able to increase capacities, we believe there would be some advantages or some benefits on account of fixed cost dilution, on account of lowering of some other costs as well, and potentially as we even foray into new product segments, which are blends and ASA, which are the new products which we have launched in the market, we do believe that the product mix over a period of time will improve and will offset or mitigate any risks coming in from competition. All in all, I think it would be safe to assume that the current spreads are defendable on a blended basis, and as the volumes and the product mix changes, this can only improve.
Great, perfect. And just on the import substitute new blends that we have developed, which is PC ABS, ASA, PA ABS, would you be able to help us on the market size or the addressable size over here? How much of this kind of a blends are getting imported, which we would be substituting it?
Yeah, so overall blends that we have identified on an addressable basis are around 40 to 50,000 tons of market in India. I'm not able to here clearly give you the market size for each of the blends as of now, but this is the addressable market for us for all the blends that we have developed and are in the process of developing. This is also a high growth business because again, this is going into the same sectors that we have mentioned, which are growing rapidly in the country.
Perfect. And continuing on the same high growth segments, we have a presence in, say, auto, electronics, healthcare, households, toys, and uniqueness about these segments is that there is a big Make in India shift which is happening, right? So which are the segments which you see that there is an accelerated demand growth coming up, or maybe any new industries that you are witnessing an increased applications of ABS would be helpful?
So, across the board, if you see whether it is, regular passenger vehicles in the automotive sector, whether you look at EV, which is of course still a kind of 5 to 6% market share of the overall two-wheeler segment, but growing rapidly. You look at commercial vehicles. Across the board in auto, there is a healthy demand. In household, whether it's air conditioning, refrigeration, washing machines, or even the smaller appliances market, we see a very robust growth. There is a significant amount of capacity which is being built in India. Not necessarily the entire demand will go towards meeting Indian demand. We believe that some of these capacities would be utilized towards exports from the country as well. So, that's there. With regards to medical devices, again, there is, significant interest and investments which is taking place by companies globally into India, seeing the opportunity size here, specifically in different diagnostics areas. So, across the board, there is very high growth. I wouldn't say any specific industry is really lagging compared to the other.
Perfect. And just for a clarification, when we say full year volumes are at 1.65 lakh ton, would it include SAN volumes or these are pure PS and ABS volumes?
This is the total volume of the company.
Okay, this includes SAN also. All right. Okay. Thank you. I'll come back in that queue.
Sure.
Thank you. The next question is from the line of Bhavesh Chauhan from Aditya Birla Money. Please go ahead.
Sir, now that we are expanding in a major way over the next 3-4 years, all these products that are lined up would be similar products or would be a better margin products?
So most of the products that we are offering would be similar or better. We believe that most of the products are in fact better margin products. We have to see how the competitive landscape for these products develops because many of the products, as Bhupesh mentioned, are currently import substitutes into the country. We still have to see, how the competitive intensity kind of develops, in these markets. But as of now, our own prediction is that this will help us in margin expansion.
Okay. And sir, what sort of volume growth should we expect over the next, let's say, 2-3 years?
So I think we have already given some guidance towards that. I think in terms of volume growth, it will be in line with kind of the capacity augmentation that we are looking at. We are confident that as we expand, over the next 3 or 4 years, which is, I believe we are targeting about 205 to 210,000 tons this year, which translates to around 15 to 20% growth. So we are confident of reaching that, and I think it's a similar growth for a few years until I think year 4 or 5 when we have a significant larger volume coming in on account of the expansion for ABS. So I think on an annualized basis, you're looking at 15% or higher growth.
Okay, sir. And so lastly, out of the 650 crore of capex that we are spending, we are giving out a significant amount of dividends actually. So is this capex going to be mostly back-ended, or how should we see next 3-4 years capex?
I think we'll have good clarity on the exact investment which will be required. The 650 crore number was a kind of a benchmark or a kind of a rule of thumb number which we had taken to get preliminary board approval to pursue engineering studies for the expansion which we are undertaking. We'll have clarity once these engineering studies are complete and we have a better estimation of exactly what that capex will look like. We estimate that in the next couple of quarters we'll have that detailed information with us, which will also give us an idea of the timeline, the costs, as well as the specific cash flows, which will be required to be invested towards these, projects over the next few years. So this information as of now is still to be kind of estimated.
So even for FY25, we don't have any guidance or CapEx?
So the CapEx that we have is, again, primarily due to, primarily with the debottlenecking kind of a nature, wherein we are expanding from, 165 to about 210,000 tons. So, for that no significant CapEx is required, and whatever CapEx actually already has been done or is being done.
Okay. So thank you and all the best.
Thank you.
Thank you. The next question is from the line of Nirav Jimudia from Anvil Research. Please go ahead.
Yeah, thanks for the opportunity, sir. So I have two questions. So one is, when can we see the effect of this improved volumes of the debottlenecking? Because you mentioned that this year we are targeting close to 210,000 tons of volume. So when, if you can just share your timeline in terms of how these capacities would be coming up both for ABS and PS, because I think PS is a larger one. So if you can just share that timeline, that is one. And along with it, if you can just let us explain, like what we have seen for ABS, like we have many value-added grades in our portfolio. Is there a possibility of similar value addition possible in the PS side over the traditional GP and HI which we produce? And if you can just correlate it with the user application which may be using these value-added products of PS, that would be helpful, sir.
Sure, Nirav. So, with regards to the expansion which is taking place, or debottlenecking that is taking place, which will help us, this is already an ongoing process. So, every quarter we will have some increases in volumes. We believe majority of the work will be carried out probably after the first 2 quarters of this financial year. And middle part of the year or middle part of the financial year is when we anticipate those newer volumes to come on stream due to the debottlenecking. In terms of value-added grades of polystyrene, so essentially there are many grades of PS which we are developing to meet the market requirements. Historically, wherever we have not been present, for example, in the refrigeration liner grades, for certain high gloss grades, certain low tint grades, which again, go into either refrigeration or air conditioning or into, washing machines. So there are 2-3 applications again on PS also, where we believe, these additional grades which have not existed with us in the past, is something which we are developing, where we do believe we will have, kind of a better margin structure as opposed to what we have currently.
Correct. And sir, when we see our specialty volumes out of our total ABS volumes, I think they are close to 55-60%. Correct me if I'm wrong. Let's say for PS, when we will start selling those value-added grades, what you just mentioned on, which will help us in improving our per kg margins. What level of specialty volumes need to form out of our total sales volume of PS so that it could come near to the per kg margins of ABS which we are currently generating on?
I'm not sure if I'm able to completely correlate ABS margins with PS margins even after such a shift. We do believe there will be an improvement in the PS margins. The improvement in PS margins is going to be a function of 2 things. One is, of course, the new products or new grades that we are developing within the PS. How much time that will take is difficult to estimate at this stage. The second part of improvement will come by way of higher OEM business, which we haven't had too much. In the past, I think there has been some kind of concerns over the continued supply of PS from our plant, which to a large extent has been kind of handled and taken care of. So there is no more doubt about our PS manufacturing consistency. And since that has been taken care of, we see a greater engagement with OEMs, which will also help us get more contractual business, which will also eventually in turn help us with better margins.
So second question is on the cost part. So in one of our discussions in the Concall, you mentioned that we've been working on the power side. So if you can share the progress of the same, where we are currently in terms of those cost optimization benefits, because one of the slide in the presentation also mentioned that cost optimization is continuous and we focus to maximize the business value. So if you can just share your views in terms of the benefits coming out of power or any other such cost initiatives which we are currently on the planning stage. And if you can just along with it also help us understand, like if we see our current conversion cost based on the volumes which we have clocked in FY2024, like 165,000 tons, assuming the same amount of volumes and the cost initiatives which we are currently undergoing, how much could be savings happening to us if we take all those cost initiative measures in total? Thank you so much.
It's a little difficult to exactly quantify what that number will be, but I can give you some of the measures that we have undertaken and where we are seeing benefits. If you look at power and fuel, for instance, and specifically in fuel, we already have incorporated certain system in our Nandesari plant, wherein, in terms of the steam costs, in the last, 5 months or so, we have seen a saving of close to 1.5 to 2 crores just in the steam cost, which on an annualized basis probably is going to be more than 4 crores just on fuel cost in one of our plants. We believe that we will have, a similar saving, if not higher saving, also in our Dahej plant as well as in our Kathol plant, where again, the steam source of producing steam is something which we are working on as a project to modify and improve. So I think that will lead to a significant rationalization of our fuel cost. In terms of power cost, while complete clarity is still not been given in the government power policy, we have kind of gone ahead and done some groundwork. I think in the next quarter we'll have complete clarity on what we'll be doing with regards to power and how cost savings will be achieved. But we do believe there is a significant opportunity to reduce costs in terms of power as well. As you see, many companies have signed up with kind of power supply companies offering kind of wind solar hybrids, which by way of SPA are able to reduce their power cost, and we are pursuing a similar line. Of course, the power agreements or power policies is still a state subject. So, some states have been able to do it faster than others. Well, it's happened in Gujarat as well, but there are certain clauses which still have to be, completely cleared by the government. So, in any case, that should be done soon, and we believe that will, add to our kind of power saving as well. All in all, I think most of the projects that we are doing, debottlenecking or otherwise, are all brownfield projects. So we will see some fixed cost dilution because we do not anticipate pro rata similar amount of fixed expenses to go up, whether in terms of manpower and otherwise. There are other projects as well which are in logistics and other areas which will also lead to significant savings, but currently it's hard to exactly estimate. I think we will see the impact of at least some of these things in specifically in power and fuel in this year, in the full year that we see, and more so in the next couple of quarters. And for logistics, we will see in the following year, which is next year.
Got it. So just a last clarification. So you mentioned that most of the debottlenecking would be happening in second half. So the volume growth predominantly would be more towards the second half of the year than the first half of the year.
Yes, that would be safe to assume. However, we have also added new products, blends, which will also help us in some volume growth. Again, we are looking on an annualized basis. So we are confident that, while the capacities will be augmented in the second half, whatever the overall target for the year is still something we'll be able to achieve.
Got it. And this 20,000 tons for ABS debottlenecking would be more towards the standard grades, or it would be more towards the specialty grades which we mentioned on?
It will be a mix.
It will be a mix of that. Thank you so much, sir, and I'll join back in the queue. All the best.
Thank you.
Thank you. The next question is from the line of Faisal Hawa from HG Hawa. Please go ahead with your question.
So, sir, if we take next 3 to 4 years, what is the kind of CAGR sales growth should we be expecting from our company?
So, sales growth is a function of the pricing of the product which is prevalent. Sometimes the pricing of the product is linked to raw material cost, which is difficult to ascertain over a long period. I can talk about volume growth, which is something which we can control better. I do believe that in terms of volumes, we should be able to grow at about 10 to 20%. So 15% or so is what we are targeting in terms of volume growth over the next several years.
And how much would it come would come from exports? Are we targeting it in an active manner?
So currently, as you know, in ABS, where we have kind of a large debottlenecking and expansion plan, 50% or so of the market is still satisfied by imports. So in terms of overall volume growth, we are still looking, first to satisfy our existing customers, and only then look at exports as a proposition. We have a strong brand positioning also in the Indian market. So it behooves us first to look at that as an opportunity and only then pursue other opportunities once we have additional capacity already in place. So there is some time before we do that. Of course, we can always look at specific opportunities if they are attractive, but I think we are still better served by addressing the volume demand which exists in India. With regards to PS also, we believe that there is an ample opportunity for us to grow in India in terms of overall customer demand and requirement, specifically with regards to the different grades that I already mentioned in earlier part of the call. So long as we are able to develop these successfully, which is also going to contribute to a better product mix and a better margin in PS, we are again better served in satisfying or meeting the demands of our existing customers here. But we are open to looking at specific opportunities if that from a strategic point of view serves the company better in the long term.
Thanks a lot for answering my question so well.
Thank you. The next question is from the line of Sanchita from Robo Capital. Please go ahead.
Good evening, sir. Thank you for the opportunity. I just wanted to know what your outlook is on the EBITDA margins overall. I believe you had mentioned during previous con calls that you were internally trying to work towards achieving a 15% kind of a number. So what would be a sustainable number that we can expect for FY25 and FY26?
So, thanks for your question, Sanchita. Typically, we don't give any forward guidance on exactly what EBITDA margins we are looking to do. 15% is a number which I think was slightly misinterpreted, but however, I can still address that question. I think we are working towards obviously higher EBITDA margins by way of improving the product mix, by way of increasing the capacities and thereby helping in diluting some of the fixed costs. Also, there are some cost rationalization measures that are underway. So in terms of all the efforts that are going on, we believe at the very least the existing annualized EBITDA margins are sustainable, and we are obviously aspiring to do better than what we have in place as of now.
Okay, that was very helpful, sir. Thank you. And my second question was regarding our realizations. So in Q4, they were slightly on the lower side. So by when can we expect them to start improving? I just want to know your thoughts on that.
The realizations in Q4 were lower compared to Q3 or compared to Q4 of the previous year?
Compared to Q3 or FY24, sir.
So, if you look at overall volumes were higher. So it could have been, as I mentioned earlier in the call, a function of the product mix. So this will change, quarter on quarter. Overall, in terms of absolute performance, Q4 is better than Q3. As you can tell, overall volumes are much higher. And sales are also higher, to the tune of, I believe, close to 20%, if I'm not mistaken. So, this will change quarter on quarter. But I think, like I again mentioned, that we are in a kind of a seasonal business at times. In some seasons, there are certain products which sell more and some seasons where there are certain products which sell less. So you have to look at kind of a blended product mix on an annualized basis and see the performance of the company in that context. So on an annualized basis, whatever performance we have of the organization is what you can assume will be the case, if not better, going forward.
Okay, all right. Thank you so much.
Yeah.
Thank you. The next question is from the line of Ranveer Singh from Yashvi Securities. Please go ahead.
Hi, Rahulji. Am I audible?
Yes.
Yeah. Congratulations on your debottlenecking. Like, you guys have increased the capacity by 50% till now. Congratulations on that. I have a couple of questions. So I see the company sales volume have increased by 11%, like if I see FY23 versus FY24, but the realizations have reduced by 15%, like it was 1,59,000 per ton, and which has become 1,34,000 per ton. So how do we expect the realization to be in the future, and why has it reduced like so much?
So Ranveer, actually the realizations over the whole year, if you look at, are somewhat skewed by the first quarter earnings, which were in 22-23. The first quarter, if you look at the EBITDA, I think it was in excess of, 125 crores or 127 crores, if I'm not mistaken. The margins were significantly higher. So this is kind of the hangover of that, wherein due to COVID and supply chain disruptions globally, the margins were disproportionate, and that continued on till the first quarter, which has had an impact on the overall annualized realizations, if you will. But I think it would be fair to or better to compare previous quarter to the current quarter or quarter on quarter to get a better idea of what a normalized realization would be and what a defendable realization would be. So the interesting thing is that in spite of a very high kind of a margin or realization in the first quarter of 22-23, overall for the whole year, our EBITDA margins are still fairly similar. So that only tells us that in spite of the kind of skewed performance that we had in the first quarter, we were able to bring in efficiencies so that at least on an annualized basis, we are still, at similar levels.
Okay, Rahulji. Thank you. Rahulji, I have another question. What I understand of the total ABS industry is in India, the total demand is of approximately 3 lakh tons per annum, which will grow at 8 to 10% CAGR. I am aware that you have announced a capacity expansion and even your competitors have. But I see most of the capacity expansion coming in FY27-28. Why is it that the most of the capacity expansion is coming in 27-28 rather than, in the next couple of years? Because right now there is there's a demand in India which can be supplied through India, because I believe that 50% of the commodity is being imported from outside. Is my understanding correct?
Ranveer, you're absolutely right. If I had the plant today, I'd be very happy, but I don't have it, and it takes time to build the plant. So I think the challenge is in the time taken from engineering study to detailing to procurement and finally to commission erection and then commissioning the plant. So we have only given the timeline associated with that entire process, and that is where we will need a little bit of time to bring in the plant. As you know that our management took over the company only in November 22, so it's been about 16 odd months that we have had management control over the company, and in this time is when we realized and we announced plans to go ahead with expansion. Had the expansion been done earlier, we would have been, of course, well placed to meet the demand in the country. But nevertheless, I think we have embarked on this journey and we will try to do it as soon as possible.
Yes, sir, congratulations on that. I'm very happy. So, sir, how much time does it take after we get the consultancy report to, expand the capacity, and why is it such a time-taking process? I actually don't understand the industry in detail. That's why I'm asking you. Yeah.
Yeah, so, of course, it's a function of, chemical industry requiring a lot of detailing to be done. There are multiple things. So, first of all, post the, basic and detailed engineering, there is, multiple studies which have to be carried out from a technical aspect to understand, the reliability or, of the whole process. Once that is done, there is also a lot of key proprietary or key specialized equipment which are part of the plant, which are very long lead items. So there are equipments, which can take anywhere from 12 to 18 months just for delivery. Even prior to ordering that, like I said, a lot of analysis has to be done. So these are things which kind of can happen only one after the other, in series, not in parallel, unfortunately. And once that is done, the entire process becomes as long as we have already mentioned. Of course, our entire effort is to try and shorten it as much as possible.
Thank you so much, Rahulji. We've been shareholders of the company since the last 1.5 years, 2 years, and you guys have been doing a phenomenal job. Thank you so much, and best of luck.
Thank you for your confidence.
Yeah.
Thank you. The next question is from the line of Deep Chikalia from 9 Rays Equi Research. Please go ahead.
Yes, sir. Sir, my question is, the 50% of ABS which is imported by India is basically from which country? That is the first question. And the second question is, do India import any, PS from any other country, and by how much percent?
Yeah, Deep. So in terms of ABS imports, from what we have analyzed, there is ABS which comes in from Korea. It comes in from Thailand, Taiwan, and sometimes, of course, from Europe as well and the Middle East. But Korea would be, I think, the largest kind of supplier for ABS into India. For PS, we see scattered information. So there is material coming at times from Thailand, at times it comes from Iran, it comes from other countries as well. So there is no steady supply of PS into the country. PS last year, from what I know, there was an import of close to 60 to 70,000 tons. And ABS, of course, as you very well know, it was close to 50% of the total demand.
Okay, sir. That's helpful. Thank you, sir.
Sure.
Thank you. The next question is from the line of Het Shah with Dalal & Broacha. Please go ahead.
Yeah, hi. Good afternoon. Can you hear us?
Yes, Het, go ahead.
Yeah. First of all, congratulations on a good set of numbers. So, in fact, we got dropped in between, so I think this question might be repeated, so apologies for that. So, you said while the capacities are being increased to 210,000 for FY25, you said while the expansion is happening back-handed, but you are comfortable meeting that production target for the full year. Am I right?
That is correct.
Okay. Sir, I was wondering, I believe the gross spread per ton is something like 34,000 per ton, while the EBITDA is like 16,500 to 17,000 per ton. So there is this huge gap of roughly 18,000 per ton. When I say gap, is other expenses. So now, because of all the cost optimization measures, value-added product portfolio going up, expansion happening, and therefore operating leverage kicking in, I'm sure, you actually already pointed out saying that there will be expansion of margins. But how much can it be? Like, it will be, is it safe to assume that it can be like 5% or any color on that, sir?
Difficult to give you an exact number on that, Het. I have mentioned it repeatedly. I think it is safe to assume, where we are at is a defendable number, like I'm repeating myself. I believe on a blended basis, we are at about 12.2 or 12.3% EBITDA margin. And going forward, with all the measures in place, that should only increase.
Yeah, but that increase will be, what the sense what we are trying to get is that will it be like 4-5% increase in the EBITDA per ton number, absolute number, or it can be higher also? I'm not trying to get a quantification, but just a direction.
So it will be a few percentage points higher. Whether, of course, you have to look at the overall industry, right? If certain industries are able to achieve certain margins. So in the context of the industry, I think we will still perform well, is what I believe, given our technology, given all the strengths in the company. And to that extent, it will be a little bit better than what we are at, right?
Okay. So my last question is, so basically I think that our raw mat prices, styrene monomer prices have been going up of late. I don't know how much was it reflected in Q4, they have been going up of late. So basically, in fact, being a raw material for us, it should have impacted our margins. But if I see, we have maintained our margins well. So is that a right understanding?
Yeah, that's right. So, like I mentioned in previous calls, not this one, is that a lot of our business is driven by formulas as well. And in those formulas, we are able to pass on increases in raw material pricing to our customers, fairly straightforward. There could be a lag of a month or two. But, again, on an annualized or even within the quarter, we see a fairly leveling off in terms of being able to pass on the increases of raw material onto the customers. The margins are generally well protected.
Okay. Got it. Yeah. Okay. Thanks and all the best.
Thank you.
Thank you. The next question is from the line of Aditya Khetan from Smith's Institutional. Please go ahead.
Yeah, thank you, sir, for the opportunity. Sir, sorry if the question is repeated again. Sir, my question was onto the ABS business. Sir, we are witnessing that in India, so Supreme Petrochem is also putting up a capacity. Bansali Engineering, they are also expanding. So it seems like, sir, for the next 4 to 5 years, there would be a lot of capacity into the market, wherein the demand is roughly growing by only about 6 to 7%. I just wanted to know your thoughts, how the competitive intensity will change, or you think that despite capacity addition also, the industry can, so the demand can grow to a certain level, wherein the capacity can meet it?
Yeah, so I believe fundamentally that the demand, at least if I look at, you have asked a question on ABS specifically, so I'll answer for that. ABS demand, I think, is growing at close to between 7 to 10%. And even if I consider 8.5% as a kind of a conservative number, even then we believe that in the next 4 years, the capacity, from 300,000 tons, which is actually slightly higher than 300,000 tons this year from what we have gathered data on, will exceed, 400,000 tons in year 26-27 and probably go to 450,000 tons in 27-28. If you just add up all the capacities of everyone who has announced, including ours, you will find that, that the market is still going to be underserved. So I think if you just do those calculations, you'll find that there is no concern on, the market supply situation versus the demand.
Okay. And sir, this out of our total ABS, so production, how much would be the specialty grade ABS?
So it's around 60-65%. It fluctuates again quarter on quarter, but on an annualized basis, you can consider that.
Okay, and sir, we are manufacturing ABS in batch processes or in continuous process?
It's emulsion ABS is what we call it in terms of technology.
Okay, so this runs on batch also?
Yeah, this is a batch process.
This is a batch process. Okay. And sir, my next question was onto the polystyrene. Sir, polystyrene, we are not witnessing any sort of capacity addition. So recently only one of your competitor has expanded, but no new capacity expansion is lined up. So how you see this market evolving for the next 2 to 3 years?
If you read my last few investor presentations, we have clearly mentioned we are increasing capacity in polystyrene as well. So capacity in polystyrene will also be augmented this year. Right at the beginning of the open remarks also, Mr. Purwal also mentioned that we are looking to increase capacity of polystyrene. So polystyrene capacity will be also augmented, in fact, this year as well as going forward in the next few years. We do believe that demand in polystyrene will also grow at around 5 to 6%, if not higher, again, conservatively speaking. So keeping that in mind, there will be an ample opportunity for us to participate with a larger capacity in place.
Got it. Sir, just one last question, sir. I don't know whether we share this data or not, sir. Is it possible to share the spreads data of ABS and polystyrene?
It's difficult to do that because, again, the prices vary across grades, vary across application. volumes, things like that. So there is no specific price of one grade. We make several grades, both in the case of ABS as well as PS, and the pricing has got a very wide range in terms of what we offer in the market.
Okay. Got it, sir. Thank you, sir.
Yeah.
Thank you. The next question is from the line of Nirali Gopani from Unique Asset Management LLP. Please go ahead.
Yeah, hi. Thank you for the opportunity. So Rahul, you have spoken about the industry, and my question is broadly on the industry. So there is this belief that China, which is currently an importer of ABS, will become self-sufficient in the next few years, and hence the other Asian countries which currently supply to India will have excess of capacity available. So, and hence negatively impacting the price. So your thoughts on that or any comment will be helpful.
Yeah, so Nirali, if you look at, post the first quarter of 22-23, in fact, we started seeing that impact already. Post-COVID, China did not come back as strongly as was earlier anticipated. There were also new capacities which have come on in China. So there has been a fair amount of pricing pressure, from countries like I mentioned. In the case of ABS would have been Korea, Thailand, Taiwan, etc. And similarly in case of PS from other countries. So that pricing pressure is already in place. So, there is no, this is not something which is going to happen, but it is already happened and is happening as we speak. So, we anticipate, that's why I said we are in a normalized business environment now, where we anticipate things to remain as they are. And, to combat even further pressures which may arise, we are looking at mitigating strategies.
Perfect. And with this focus on the value-added products, so currently the specialized part is roughly 65%, which you just mentioned. So this number can go up to what number, like the specialized part or the value-added part?
It's difficult to say that right now. There will always be a percentage which will be specialized and the other part which will be standardized grades. Whether it's the specialized grades can go to 70, 75, 80 is hard to, give a number to as of today.
Okay, yeah, that's it from my side. Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants, due to time constraint, we would request you to limit your questions to 1 or 2 per participant. Should you have a follow-up question, we would request you to rejoin the queue. The next question is from the line of Nishant Shah from Moneybee Investment Advisors Private Limited. Please go ahead.
Yes, good day, sir. Just wanted to ask you one question. Wanted to understand that the utilization levels have been almost at full capacity. So will this continue post the debottlenecking?
Yes, Nishant. So there is ample opportunity given the imports which are happening in the country. We anticipate that as we keep on debottlenecking or doing brownfield expansion to kind of augment our capacities, we should be able to run the plants kind of fairly full.
All right, sir. And one more question. In the previous quarter, you said the polystyrene margins and volumes were low. Is that understanding correct?
Yeah, very good. You are talking about Q4 or Q3?
Q3.
Yeah, it was lower.
Yes. So has this continued in this particular quarter, and do we see like a trend reversal in polystyrene margins?
So this quarter, the trend is not like that. The volumes have been quite better in comparison to the previous quarter, Q3.
All right, so that's it from my end. Thank you.
Thank you. The next question is from the line of Rohit from Progressive Shares. Please go ahead.
Hi, Rahul. A couple of questions. The first one, in your opening remarks, it was mentioned that there is some disruption in the operations. Is it possible to quantify what sort of impact was there, or production loss or turnover loss?
There was no, it was kind of routine, frankly. There was no significant loss. If you look at overall volumes, we still met our targets. It's just that at specific moments in time, we have to change product mix based on, certain disruptions. So that's all that was the case, and which is why, we did what we did in terms of numbers.
Mm-hmm. So this was more towards the standard grades or the specialty grades?
The combination of both. So it had to do, across the board.
Okay. Well, we are proxy to the EMS, that is Electronic Manufacturing Services. Do you think there is scope for getting some products or processes or some design to be patented? Or are we already working on these projects?
So generally, the patents for design of the product itself is of course handled by EMS companies themselves. What we try to do is work closely with these EMS companies to get spec in, right? So they have, these programs wherein, the value addition programs or the quality programs wherein for launch of new products or models, they work with us closely to understand, specific requirements for that application, and they spec us in. I think as long as we are able to do that, that is good enough. There is no real patent required or patent necessary, to protect our interest over there.
Mm-hmm. Any new labels or any new logos which you have recently added in the last 3 or 6 months, if you would like to share that?
Yeah, so there are 2 new product ranges that we have launched. There is Styroloy, which is a blend, which is a common blend brand name which we are going to use for polycarbonate ABS blend as well as a nylon ABS blend. And there is Acelac, which is again a brand which we have launched for our own ASA production in India.
Mm-hmm. And is there any possibility that these new products, they can help you mitigate the issues that we generally have related to seasonality?
So we are hoping that it may not completely change, because there will be obviously some seasonality in the business. October to December, like I mentioned in previous years, could potentially be a dull period. And that may continue to be the case regardless of which polymer you're doing. But overall, I think from a top level business perspective, yes, the higher value and more specialized grades of products can help us overcome some of the volatility associated with the seasonality.
Mm-hmm. From this 3.6 lakh metric ton, we're gradually moving towards. Do you think we are moving towards 5 or 6 lakh metric ton by 29 or 30 or so? As the demand in the market keeps increasing, do you think there is more scope for more expansion for us?
Absolutely. So I am quite optimistic about India's growth, which is where our primary place of business is. So over the next decade, I do believe there will be an ample opportunity for us to grow significantly further, even from what we have already announced. But like I said, in terms of the current opportunity which exists and whatever we have identified in terms of resources already allocated, this is what we are targeting in the next 3-4 years. And for sure, as the situation develops and the market develops, we are going to be continuously cognizant of that and move our plans accordingly.
Thank you, Rahul. Thank you for answering my question. Thanks a lot.
Sure.
Thank you. The next question is from the line of Jayesh Gandhi from Harshad Gandhi Securities. Please go ahead.
So if I heard you correct, you talked about a volume guidance for next year as 210,000 KT. Is that correct, sir?
Yeah, about 205 to 210,000. That's right.
Okay, so that would mean that probably we will be doing 40% odd volume increase next year.
So in terms of production, I think we are around 165 or 170,000 tons. So you're talking about close to 20% essentially.
Okay. And so by any chance, do we have any figure on our market share?
In terms of ABS.
ABS and PS both.
Yeah, I think in terms of ABS, the market share that we have is probably close to 30%. And in case of PS, our market share is closer to 20%.
And so any increase in this market share vis-a-vis last year?
Yes, there is some increase.
If you can quantify.
So last year, I think in ABS, we had about 26 or 27% market share. And in PS, our market share was closer to around 17%.
That's all from my side, sir. Best of luck for future.
Thank you. The next question is from the line of Ranveer Singh from Yashvi Securities. Please go ahead.
Yeah. Thank you for the opportunity again. So you said, so are there any players in ABS who are private limited companies? Are there any private players which are competitors for ABS?
In India?
Yes, sir.
No.
Okay, sir. Thank you, sir. Go ahead with the next.
Thank you. The next question is from the line of Priyank Chheda with Valium Capital. Please go ahead.
Yeah. Sir, export strategy is a piece, something that is missing out. Any thoughts on that?
So, Priyank, basically, we have a very, very strong brand in India, right? Absolan. Now, this company has had these brands specifically in the case of ABS for the last 4 decades. And today also we are a preferred market supplier. To let go of that advantage with any additional capacity where we can easily, capture that market in India and go and look for exports, I'm not sure if it is a very value accretive exercise at this stage in the company. When we have additional volumes and we are looking to fill those volumes, we can do that. Because when we enter new markets, essentially we are only going to add to the competitive intensity in that market. And that would, require us to obviously position ourselves, in terms of, the existing incumbents in the market at an attractive level. So that would, I believe, not be a very value accretive exercise as far as our company is concerned at this stage. When we have additional capacities in place, definitely that is something that we'll do. Having said that, like I mentioned in earlier part of the call, if there is an opportunity which is attractive, which is where we are getting good value addition, we are definitely open to that.
Perfect. And on a strategic thought, after Agarwal family took over this company again, and now it's 16 months into the company, what are the broader focus areas that you would like to highlight that these are the strategic level changes that you have introduced? Of course, accelerating the capacity addition is a great thing, but then there would be other strategic changes that would be required for an organization to be future ready, which you have implemented and which would be the areas that you would like us to, see a maximum action going ahead for us to track?
So many areas, Priyank. Like you mentioned, capacity augmentation obviously is a kind of critical need of the hour. There is cost reduction or cost rationalization which is needed in terms of better efficiencies in the system. There are many projects we have undertaken for that. Some flavor of that I've already given in earlier part of the call. There is, of course, new products, to meet the needs of our existing customers and certain new customers as well, where we have the infrastructure and capabilities already in place, is something also that we have mentioned in the call. In addition to that, we want to be future ready. So we are looking at, closely understanding in terms of sustainability where our organization is and is going to be in the future. So I think from all angles, we are trying to ensure, the organization is primed to grow fast, grow in a responsible way, and grow in a manner which is obviously profitable for all its stakeholders. So I think we are trying to cover, all angles from that perspective while keeping a strong culture in the organization.
Great. And any targets on these new product developments which we are undertaking? What would be that kind of a sales volume contribution, say, in the coming years that you would like to have at least from the new products that you are undertaking?
A little early to give that estimate as of now. We have just started the process. We have launched the products. Some places we have got validations, already through. Some places the validations are going on. We believe in the next few quarters we'll have a much better handle on exactly, what volumes we are going to be able to achieve. But we do believe we'll have a good position in those products as well because we have deep-rooted relationships with all the customers who are currently consuming these products.
Perfect. And it's last question, if I may.
Sorry to interrupt, Mr. Priyank. May we request that you return to the question queue for follow-up questions. Thank you, sir. The next question is from the line of Razmik Oza from 9 Rays Equi Research. Please go ahead.
Thanks for the opportunity, sir. My question was...
I request you to use your handset, sir. Your audio is very muffled.
Sorry for that. My question was on the capex and expansion, sir. You clarified that this year capacity going up to 210,000, there is no major expansion, capex, debottlenecking. And thereafter then between 25 and 27 we have around 45,000 tons of PS coming in through brownfield expansion. And then there is straight 105 to 210 ABS capacity coming in 28. So I just wanted a bifurcation of this 650 crore rough expansion spread across next 3 years. How much will go in for PS from 105 to 115 by now to FY27, and how much will go in for the ABS expansion that is straight going from 105 to 210 in FY28?
So Rashmi, we have, like I mentioned earlier, that we have gone ahead and hired, firms or mandated firms to do engineering studies to exactly estimate, the technical aspects of the project as well as do cost estimations in terms of exactly what will be the capex required for each of the projects that we are looking to undertake. So it's a little premature to give exact breakups and exact amounts, because the numbers could also be slightly different from the exact 650 crore number that we had taken, primarily for a board approval to pursue engineering studies. So we'll request you to, wait for some time till we are able to give that information more clearly.
Okay. But is it safe to assume that bulk of the 650 crore will go in for this ABS capacity going up from 105 to...
Sure. A larger capex would go towards ABS, and PS would be a smaller capex. That would be safe to assume.
Okay. Thanks for the clarity, sir. Thank you and best of luck.
Sure.
Thank you. Ladies and gentlemen, as there are no further questions, I would now like to hand the conference over to Mr. Chintan Doshi for closing comments.
So thank you all investor and investor community for joining the call and showing the interest in the company. And we look forward to answering you in the next investor call, which will be announced in suitable time in future. Thank you.